uranium is red hot right now, just like not in the world of crypto, but in general. There's a couple trends happening. One is that opposition to nuclear power is waning.
There's been a lot of unfortunate and chaotic geopolitics that could maybe serve as a tailwind for uranium markets.
There's a tremendous appetite for power due to the demands from generative AI.
100%. Ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chaparro, and I'm very excited for this episode of the program. Joining us on the other side of the mic is Athur Breitman, and we're going to be digging into Uranium.io and maybe other esoteric assets. We shall see. Sir, thanks for taking the time.
Thanks for having me.
Uranium.io, an entirely new marketplace for trading uranium and powered by Tezos technology, is live. As global energy demand rises and nuclear power becomes a key player in decarbonization, demand for U3O8 is increasing. But up until now, its access to retail investors has been limited. Unlike other precious metals like gold or silver, the traditional uranium market has high barriers with minimum lot sizes of tens of thousands of pounds that's limited retail participation. Tokenized uranium breaks these barriers, enabling anyone to own physical uranium with accessible pricing and no need for complex storage. Investing in uranium is now widely accessible, and you can learn more at www.uranium.io. For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
So walk us through the journey. How did we get here? When you look at an asset like uranium, obviously it powers, a lot of, it's a core asset in terms of energy, but its market isn't necessarily as robust or as transparent or as liquid per se as others. But what made you guys focus in on this asset as a core opportunity?
I mean, I've been interested in it a few years ago. And a few years ago, I tried to, I wanted to buy uranium. I wanted to be long uranium in my personal portfolio. And I realized that there were just not many good options. You could buy physical uranium, but it was a minimum like around $4 million. So that's a bit expensive. And there were some exchange-traded products for it, but they were not really tracking the price of uranium. They could be you could trade it at a huge discount to uranium for long periods of time. It's more like a fund than an actual way to trade physical uranium. And I got fascinated by that because I saw that, you say esoteric asset, but actually pretty much everyone's heard of uranium. It's a super important asset for energy. I also think that there's a bit of a nuclear rebirth. And so I wanted to be able to ride that wave.
That makes a lot of sense. Walk us through, I guess, the market structure. Then you talked about how it was difficult to purchase something in a smaller size. I'm sure even if you wanted to go long with a $4 million position, it's probably a Herculean task to access that market. What does it look like today?
Yeah. So typically the way it's traded is that, so when we say uranium, we're talking about uranium oxide, right? So uranium oxide is an ore that you get out of the ground, sometimes called U3O8 because it's 3 atoms of uranium, 8 atoms of oxygen. And that's before it's refined.
It's like gold, rusty looking kind of.
Yeah, it's called yellow cake.
Yeah.
Oh yeah, it's yellow looking, and they are basically like 3 big places in the world where they store it. One is Cameco in Canada. There's one location in France, and I think there's one location in Kazakhstan. which has like huge mining industry for uranium. So the uranium from uranium.io is with Cameco in Canada, and the way it's usually traded is that you have an account with Cameco, and I have
Uh-huh.
an account with Cameco, and then we enter a trade, and then they do a book entry where like what was assigned to you is to me is now assigned to you or vice versa, and that typically happens in clips of like 4 million. So that's the old way. And what we're trying to do is to make it so that we can do it in increments of $1 or even less.
So are there no like derivative products on uranium? If you think about other assets that are, coming out of the ground or, difficult to store, like oil, right? You have futures and ETFs.
Yeah. So there are some ETFs for uranium, but there's no creation redemption. So you can't go and say, "Hey, I have a bunch of uranium deposited here. Create some shares for me." Or vice versa, saying like, here's some share of your ETF, credit my account at Cameco. Like normally that's the heart of the ETF business. Like the reason that ETF I think are a great product is when you can do this creation and redemption, because fundamentally it anchors them to the underlying, as opposed to like some exchange traded products. There's no creation redemption. All you can do is essentially say like hopes that the manager is going to buy back shares when it trades at a discount, or like issue more shares and buy more supply when it trades at a premium, which doesn't typically happen with the few funds which are around uranium. So you have one by Sprott, and you have one in the UK here called Yellow Cake, and these typically have big discounts and high fees. They are derivatives, so the CME has a uranium future, but there's not a lot of activity. There's almost no activity on it.
Well, why do you think there's no activity on it? Does that have to do with sort of the underlying market or just interest in trading the asset?
I think you need a robust spot market before you can have a derivative market.
That makes sense. Okay, I have a ton of questions about uranium specifically, and the product, but I want to maybe just think on a high level, your journey in crypto and thinking about the power, or the unlock that blockchain brings to financial markets, right? So you've been in crypto for a long time. How do you like when we think about the transparency or liquidity that like blockchain brings to different assets? A lot of people's minds go to stocks or they go to bonds. Obviously, the RWA Meta is having a bit of a moment with tokenized treasuries and those types of assets. That there's a clear product market fit. When I think about 5 years ago or even 7 years ago when I first started covering crypto as a reporter, there were a wide range of firms trying to tokenize real estate, to bring more liquidity to that market, fractionalize ownership, and bring more efficiency to privates and more unliquid markets. What do you think about that evolution? What markets, what assets are primed for tokenization? Which ones aren't? And just walk us through your journey of thinking through um, where crypto and blockchain can have the most impact.
So you're right that we saw like it's now rebranded as RWA. They were called security tokens in back in I would say 2019, and RWA is a better world big aware as well, because not every asset is a security. So for example, uranium is a commodity clearly, uh, and I think there were several impetus for people to exist, but a big impetus for tokenization at the time was people wanting a distribution channel to investor. So they were saying, look, I have this project, and there's a lot of people who just made a lot of money on blockchains. And surely, like all these newly minted millionaires, the first thing that they want is to diversify away from what they have and like buy these, other assets. And that wasn't really the case, because there was an impedance mismatch in a sense, like the type of investor who gets excited about, holding cryptocurrencies. They're not necessarily the one who's going to get excited by a REIT or, some real estate product. So there was not really a match with the investor base. And
Yeah.
also those investors had access to these products outside. They don't have to stay on chain to do it. Maybe it's a little convenient to stay on chain, but they could go to a brokerage and have access to these assets. So that's number one. Number two is like it's true that there were some efficiencies. Like like as an issuer, you have lower cost of issuance if you do it on a blockchain. Like there's the gains are real. They're not massive. Like you're not
Yeah.
like it's not completely transformative. It's nice. I think people should do it. So you gain a little bit, but not that much. And you have to contend with the fact that, oh, it's a little weird and, maybe your investor base may be less comfortable with tokenized product. So it goes a little bit both ways. And finally, there's a piece you mentioned, which is liquidity. And of course, liquidity doesn't come automatically because you're on chain. Uh, it can help in a sense of like it comes, built in with like marketplace if you want. But people didn't really do that. People didn't really, use on-chain primitives to build order books. Like you didn't have a way to trade those tokens on-chain. Like people were trying to build exchanges. So potentially by being on-chain, you have this compatibility with different venues, with different custodians. But it takes a lot for this to really like come into place. And also, you're not going to get a lot of liquidity because if you're tokenizing like very like non-fungible asset, and if you tokenize like one real estate project, that's one thing, and then another one, and then another one, you're basically like diluting in some sense the asset because you have all these different assets, so you're diluting liquidity between different assets. Whereas where you've seen success has been in like big asset classes like the US dollar, treasuries, to a lesser extent gold. Like those are really big asset classes which can potentially come in with a lot of liquidity. So I think you want to start with that and not with the long tail assets if you want to get some exposure. What's incredible with uranium is that it's this big assets that's like strategically relevant for the entire world that everyone has heard about and yet doesn't really have enough liquidity.
Yeah, so there's kind of 2 boxes that you need to check for a product, um, to be successful. The first of which being the buyers out there actually need to be interested or have a desire to purchase something on chain, which wasn't necessarily the case with like real estate. Real estate buyers, REIT investors weren't really interested in entering that market at the time. So you kind of had folks entering a market without a real customer base, right? You could have thousands of people keen to tokenize their apartment complex or dorm complex or commercial real estate project. But if you don't have buyers on the other side, it's kind of pointless. And then the other aspect is it going to be or is it going to bring m- efficiencies that are order of magnitude superior to the existing marketplace? And so with something like maybe a college dorm in South Carolina, you don't have those two aspects, but with the uranium and of course a whole bunch of assets, tokenized bonds, you do, right? Because with tokenized bonds, you're kind of meeting the crypto market, crypto millionaires, to use your word. They want to access treasuries, especially in a high yield market, and they want to access treasuries in a way that's composable with their stable coins or their Solana
Yeah.
or whatever coins they might have.
It's a bit surprising though if you think about it, like the success of the treasuries, because so I think a lot of the treasuries and stablecoin for people, there's of course a payments use case, but I think in a lot of cases is people wanting to be flat, right? They want to like lever into the market or out of the market, um, and so that's the treasury is a way to be flat, which at least pay you something, whereas a stablecoin might not pay you that much. However, you have much higher yield available in DeFi than you have with treasuries, including now. And what we saw even in 2022 is that DeFi was extremely resilient. Like some DeFi, like the one that's actually built correctly and not the Ponzi schemes, but some DeFi was actually really resilient to that. And so, in some sense, I get people who don't want to touch blockchain ecosystems, and they say like, I don't want to touch that. Okay, sure, here's a treasury for you, but as long as if you're willing to touch the blockchain SIGs and deal with like the custody and all of that, why not do DeFi? Why treasuries? I find that a little puzzling.
At the end of the day, what a lot of this enables is you're like, if I think about you as the individual investor looking for uranium exposure, if you have it in a tokenized form, it can engage or be leveraged across DeFi ecosystems in a way that it couldn't be if you just had an account with the, premier go-to uranium broker.
Mhm.
That's just going to sit there. You can't really, let's say borrow against it on a DeFi protocol or, um, even have it so that it can almost be used as payments or something. It's just far less useful in that respect.
Yeah, and I think that's a bit that's been missing with a lot of tokenization projects is that we haven't seen the composability being put in place. Like, so in Uranium.io, for example, you can use an on-chain smart contract in order to trade it, to buy and sell it. And the goal also is to enable at some point also ability to borrow against it. So you want all these primitives to be available, but that's not something that's typically come with these tokenizations. In a worst case, tokenization looks like a transfer agent sitting in an office, and then when someone wants to like move their tokens, they go in and then they put a hash or like they send some message to the smart contract, and that happens, and you just like have a bit of a research on chain, but like not much happening. You want to tap into like what actually brings value to the systems, and that's, you're right, the composability and all the different extensions that you can build around the assets.
So what is the biggest challenge in sort of, if you're thinking about picking a specific asset to tokenize on the commodity side of things, what makes an asset maybe primed for that tokenization, um, outside of the things that we've talked about, right? So you guys obviously are kind of playing in commodities. Why start with uranium versus maybe something else?
Yeah. So there's a couple boxes you need to tick. You need some form of fungibility, and that can take the form of the grade, but also the location, right? So even if you look at oil, for example, crude oil and Brent are two different commodities because they're not delivered at the same point. One is delivered, in Europe, and the other one is delivered in the US. And because you can't like do a perfect arbitrage, it takes money to ship one from one place to another. They trade differently. So you're gonna need some fungibility, and for uranium it kind of works because there's not that many places that store uranium in the world, right? So you have like Cameco is a very big one, and that's like very, very clear point. And there's also not that many grade. If you look at copper, for example, you're going to have lots more grades of copper. If you look at different metals, so there's standardization happening, and that standardization happens because it helps trading. But the more standardized the asset can be, the easier it is.
Mm.
Uh, and then also you probably want low storage costs. As soon as you have storage costs, it complicates matters a little bit. So for metals, typically not that expensive. But for other commodities, like if you're looking at oil, for example, or if you're looking at natural gas, storage costs can be huge, and so that creates all this like complicated like calendar structure. Um, and also like you don't want to have too many alternatives. So a lot of people have tokenized gold on blockchains, and it can be interesting if you're already on a chain, if you want the composability, all of that. But gold is something you can get anywhere, right? You can buy physical gold. You can buy gold ETFs. You can buy gold futures. It's just a zillion different ways to get exposure to gold. And before Uranium.io, very, very few ways to get exposure to uranium.
Yeah, so it's kind of like, you have to have like an asset that's kind of standardized in a way.
Yeah.
So there has to be some like, a lack of fragmentation, I guess you could say, in the market.
Yeah, exactly. Yeah, exactly. You want the market as unified as possible.
Is there something about uranium now, that's making it a red hot opportunity?
I would say like uranium is red hot right now, just like not in the world of crypto, but in general.
Yeah,
There's a couple trends happening. One is that opposition to nuclear power, like
is waning.
is waning.
Because I know that Germany kind of, I don't know if they shut down their last nuclear power plant.
Yeah, they were paid by
Um,
Russia to do that though.
yeah.
Like
Well,
literally, it was like Russian founded.
given the sort of ongoing, conflict, you would think that,
Yes.
uh, countries, there's been a lot of like weird, not weird, unfortunate and chaotic, geopolitics that could, um, maybe serve as a tailwind for uranium markets. Even here, right in North America, our sort of, kerfuffles with Canada, could raise some questions about where we want to put our emphasize
Mm.
energy, development.
Yeah. Well, the thing is, uranium is the so. Let me answer a few things in order. So yes, I think Germany has been at countercurrent, but right now, a lot of people are building new power, like they're building a lot of nuclear power plants in China. They're building new ones in the US. And then you have private companies like Amazon building data centers next to nuclear power plants. I think 3 Mile Island is being reopened by Microsoft. So there's a tremendous appetite for power due to the demands from generative AI. The cost, in energy is quite high. So there's a lot of demand for it. There's a lot of new capacity being built, and also I would say the opposition is very generational. New generation is a lot less concerned with the risk of nuclear accidents and much more concerned with carbon impact. So as a result, like if you look at public opinion on nuclear power, it's like massively shifted. And if you look in the U.S. in particular, like historically, Democrats were more opposed to nuclear power. And again, like if you break this down generationally, that's largely gone. So I think we're going to see a lot more nuclear power plants being built. The other thing is that uranium is a tiny input, right? One of the biggest issue with a nuclear power plant, there's many benefits, but the biggest issue is that it's very expensive to build. So now they're building smaller, more modular reactors, which are cheaper, but it's still a huge capital investment. And if you have this huge capital investment, you're going to be buying uranium at any price, right? Because it's such a small input. Like your cost is the depreciation of the massive structure that you've built. The fuel is like a tiny component as a part of that. So that makes essentially the demand for uranium is very inelastic.
Mm. So is the story is it more about that growing demand for nuclear energy? Is there also like a supply aspect here as well, where there's a crunch in supply?
There's less of a supply story. There's a little bit because I think at the same time, like Russia said, like let's ban nuclear, let's ban exports of uranium to the U.S. And then the U.S. says let's ban imports of uranium from Russia. So that affects the supplies a little bit. But for me, it's way more demand driven than supply driven. And it takes time. It takes a lot. It takes time to build new power plants, but it also takes time to create new mines and to find new sources of uranium.
That makes sense. And you mentioned sort of the key players being Kazakhstan, Canada, I guess Russia as well. How do you think that this growing demand for uranium could shape the geopolitical landscape and even the uranium trade?
I think we're going to be at the end. We're reaching the end of my expertise here. We should
No,
have
fair enough.
Nick from Curzon, who's been our partner on this and helping us in this journey. And they know 100 times more about the uranium market than I do. But look, what I can say, generally speaking, in terms of commodities, is that the prices are driven by elasticity, and elasticity is very timing dependent. So given enough time, right? If uranium were like super expensive for a very, very, very long period of time, people would end up shutting down the power plants and building something else. And likewise, if uranium is very, very expensive for a while, people will start new mines and do a bunch of things. So the price is really determined by how quickly supply rises versus how quickly demand rises more than anything. It's a bit different for stuff like gold, where a lot of it has already been mined out. But for something like uranium, I think definitely as the price rises, you'll see like more deposits being found, but that takes time.
So what are some of the you enter this market just because, you were keen on going long. What sort of weird things have you come across or have you seen happen in this market?
Right. So it's not just because I was king, but it's a good way to, I think it's when advice that Paul Graham gives is like build something you want, because if you want
Yeah.
it, there may be other people who want it.
Yeah.
It's a good start. And a lot of the stuff that people have built in crypto is the stuff that no one wants, right? It's been, I think, a
100%.
curse of the space. So at least, I know that we had like one, one valid user here. Uh, Sorry, but you were saying like what have we met along the way?
Well, yeah, what have been some of the learnings or just weird idiosyncrasies?
No, I would say it took time. It took some time. Like a lot of the work has been like regulatory and legal work, in getting the structure and finding the right partner, and launching it. Like that, the thinking through the regulatory and legal part of it took the most time.
What were some of the hurdles there?
Like a lot of bad models. So there's a lot of ways to do it, in which you end up with a fund. You don't want to have a fund. Like a fund is not a good structure for doing this. So like finding a way to give direct beneficial ownership of Uranium as a token, that took quite a bit of us thinking around.
That makes sense. So when you think through the next 6, 12 months, what are some of your priorities to further grow the product, grow the platform?
That's it. So I think get more users, get more volume, get more Uranium tokenized on the platform. There's several $billion which are currently in ETFs, which have high fees, which don't really track the product, and so getting even a fraction of that market will be huge. And then potentially launching more assets.
And that's the sort of goal here, right? It's just looking at like what are the opaque and illiquid markets that we can tackle.
Exactly, exactly. And interesting markets as well. I think it's like you want to have a bit of a thesis around the market.
Like some form of like constructive view of where the asset's going.
Exactly. But in general, I am pretty bullish on commodities because uh
Are we entering a commodity super cycle?
I I don't, this is not financial advice or anything like that. But here's how I think about it, right? So uh a lot of more tasks are being automated, are like AI is becoming more and more powerful. It's going to automate more and more intellectual tasks. And so if you look at like doing stuff like in the world, it takes two things. It takes, some like capital and resources, and then it takes a smart to do something with it. If you look at a startup, typically it doesn't have that much capital. It may be able to raise capital, but its main asset is just like a good idea or like some smart people doing something together. Imagine that smart just becomes a commodity, right? That, you can just throw a program at a question and it'll do great. Then the next thing that's going to constrain everything that you do is stuff. And that stuff might be stuff to build things with, or it might be stuff to like for energy. So in general, I think that's bullish for commodities. Maybe it all fizzles out, and but for now, I would say that's going to be, and that's what we're seeing. Like the demand for nuclear power plant is coming precisely from the demand for all of these data centers.
Because AI just takes and requires a requisite of it is so much energy.
Yeah, and it scales as well. That's the thing. It's like
Yeah.
it can create its own demand because the more you use it, the more you find out stuff to do with it. The more stuff you're doing with this, the more commodities you're consuming.
Yeah, I think that makes a lot of sense. And this is a super scalable energy source.
Yeah, I mean, I think I think every energy source ultimately will be tapped. This is not to say like solar can be scaled a lot. There's still a lot of places on Earth which are not completely covered with solar panel. Uh, Hopefully, we're not moving to a world which is like 100% covered in solar panels. That's also a possibility. I'm not. It's not a very pleasant
Our
one.
outfits will have solar power panels on them, and
Yeah, but I think everything will be. I think everything will ultimately be tapped.
what else in crypto is exciting you outside of sort of the tokenization of commodities?
I mean, it doesn't have to be just commodities. I think commodities are in a good sweet spot if you want to have composability and like from like a regulatory point of view, they're very well suited. But I also like the tokenization of securities. I think that's great. But outside of tokenization, I love the art and culture segment. I think that there's Tezos is a blockchain that's home to a lot of artists. We had a bit of like, so if you replay 2021 and the NFT boom of 2021 and you replay it now, a lot of what was happening in 2021 is the same thing that you see with meme coin, which is basically like, hey, here's something you can get in quickly and do a quick flip, and it's kind of like a casino game.
Yeah.
At the time, there was a pretense of like, oh, but you're really buying into a brand, and you're like part owner of a brand, and then this is going to be licensed this way and that way. And then you get and now the pretense has been completely dropped, right? And it's just a casino game. So I think some people might conclude that, oh well, there was never any there. I don't think that's necessarily true. Um, I think there's a there. It was very, very much overhyped and very much overblown, but it doesn't mean that it doesn't mean that it's not there. And so, this this whole aspect of creating community, of creating communities, of having digital collectibles, uh, that's something that I'm still excited about, even if it's not at the valuations that people saw in 2021 around it.
Well, it's like comes down to a question of how do you create like sticking power outside of the price of something going up? Um, how do you sort of remove um, the speculative fervor from, or ensure that the speculative fervor isn't the sole driver of interest in a community?
Yeah. How do you do? And I think that the way you do it is like you do it over time, because at some point, people realize that, hey, like putting money in the newest like rising meme coin or like PFP collection isn't guaranteed to make you money. So people stop doing it, and as people stop doing it, essentially you can actually have this thing shine underneath. And I would say same thing with gaming. You know, like a lot of the Web3 gaming was overhyped, but it doesn't mean that people can't launch good game, and it doesn't mean that there's not something meaningful to be done at the intersection of game and this, because a lot of games are naturally trading games, and it makes sense to have trading mechanics in it. The thing is, like, if you can launch a project and make hundreds of millions without actually shipping a game, just by promising something, putting it, and like taking the money, people are going to keep doing that, and that's the main thing that you're going to see for a while.
What changes that though?
I think like once retail stops pouring money into this, then it changed.
Yeah. No one was buying the bag, holding the bag, the proverbial bag.
Yeah, I think that's what needs to. I think once that changes, you can actually have like a little bit of a signal rising over the noise.
That makes sense. Where can folks learn more if they're interested or if they want to get involved or chat
Yeah.
with the team?
So uranium.io is a great way to do that. You can go check out the website. It's also on Twitter. So on Twitter you can follow at Tezos, or there's also a Uranium.io handle on that you can find. Sorry, it's the network formerly known as Twitter. So it's at uranium_io.
Amazing. Well, thanks so much for taking the time.
Thank you, Frank.
Thank you.